Hey, good afternoon, traders. Hope everyone's had a good week. Hope everyone's having a good weekend. Just gonna start. I thought one of my things this year was to get a bit more active on YouTube again. A few people messaged me as well about trades. So I thought once a week I can take a bit of time out and do a little trade of the week breakdown. So this week I took a long on S&P 500, which was for 4%. So that was the trade that I took. Went long there, hit 4% target there. So I'll just sort of break down my rationale behind it, why I went long, and hopefully you guys this can help you in your own sort of journey. So if we're looking at S&P here, first thing that kind of comes out to me is we took this liquidity here to the left. So personally, for me, I always need liquidity to be taken first. So you can see at the top it says liquidity, imbalance, rebalance, target, and liquidity. So because we had this low to the left taken, if we look at the days, Monday, Tuesday, so it was that typical sort of Wednesday reversal. So we also had this gap as well. So more often than not, gaps will get filled, especially on like stuff like S&P and indices because they're overall programmed, to go long. We also had one of my other models, the previous daily low, previous daily high. So as we kind of scale down in, I'll go down into around entries. So if we go down to the 1 hour. So why did I go long? So me personally, I went long. Let me put on a few things kind of take us back in time. Yeah, so let's go back to where I was. So in here, let's put this on. So if we look at what's happening here, obviously that's that weekly, gap that we're talking about. So essentially that's where, price will more often than not revert back to, but I was happy with what I took, so it wasn't really too much. So again, what we saw was the previous daily. So first things first, actually, sorry, major sell side liquidity taken here. So you can see that was that whole sort of run up, price come back down, first target taken. So sell side liquidity taken. We then obviously had the previous daily low taken. So for me, when I see the previous daily low taken, I'm looking for that sort of change in structure. So once we saw price break here, and it's also about the characteristics of the candle, you saw a big influx of buyers stepping in. So once you see that, for me, that's showing me that there's a strong willingness to go higher. If we go down into the 5 minute, where obviously I started to take my trade setup, we can see here we've got this bullish FEG right in here. So this is where I started to think about, trades going long. And then personally, once we've had this previous daily low swept, we've had this breaker structure. Then we also had like a change of character here with price rallying past the swing high in relation to where we are. What I sort of do is I just get my fib from the high down to the low. I use a different fib to obviously, the standard sort of ICT fib, just through my sort of back testing. This is the fib that I'm sort of happy with. And you can see here, it came right down into that 68. So my entry points tend to be between 68, 78, and 88, which is a deep pullback. So around here, I do systematic sort of, risk and reward. So for me, as long as it's anywhere here, if it went to 88, I'd more likely expect that to be a wick. So it might have just wicked down into 88 and then immediately V-shaped recovery. But it sat well inside that 68, it bounced off it. And then what I did is just stop loss around here. And then my target was up here. And yeah, just a quick 4 to 1. So realistically, I think obviously traders overcomplicate it a lot of the time, but to simplify it for me personally, all you're looking at is, a key level high, key level low. You're looking for price to kind of trade from one end to the other. Once you see that sort of trade, the previous sort of low before, once price breaks through, that's showing a willingness to, kind of go lower. It's almost like, your accumulation, your manipulation. and I just trade and enter on this pullback and then put a distribution down to the opposing end of the liquidity. So that's literally all I do. In here is kind of external to internal because like I said, we had that weekly obviously gap in here. So that's where for me price was gonna be getting attracted back to, as you can see here. So it's like external liquidity was taken in terms of that sell side liquidity to the left and also that previous daily low. So then once I saw that start to go on, for me, it's just about just taking the trade from there. So that's literally how I frame it. The reason why I kind of use this sort of fib is if I was confident that this was the low, but usually I'll put my stop loss right at the low here and it will be a 3-1. Like I said before, if it did come back down to the 78, I still have my stop loss in the same place. And then it would be roughly a 5. And then if I do get the 88, which, you have to have a little bit of bottle about it, but if I do get 88%, you can see that's me done for the month. That'll be a clean 10-1. So obviously on this occasion, I was happy to do the 78 because we did have such a big influx of buyers step in. I was happy to place my stop just underneath the start of that candle because I didn't really see, markets taking out such a big impulse. So as soon as we saw that pullback for me, writing on the wicks, and it was just this was might as well call it a textbook sort of trade, to be honest. Like if I could trade anything, this is what I'd be trading. You can also see it's below the midnight open. So, guys familiar with this sort of approach. I always say with everything, you gotta kind of add to what makes sense to you and disregard the rest. For me, this has always been very similar to how I've been trading for a lot of years now. So I've just sort of refined it. Most of you know me from swing trading days, but I still swing trade, but now I just sort of have honed it into, sort of swing areas. So if I start to scale back out and scale back out again and scale back out again. For me now, when I'm looking at overall, like I said, this is a bullish market. I'd look from swing low to swing high. You guys know how I used to trade in terms of swings. So for me now, all I do that I've changed is I'll start to scale in around this area because previously what I would used to do when I was just solely swing trade, I would just set a limit, have my stop loss always at invalidation, and then I'll just have my target like that. And I'd probably be in this for the whole month, and then I'll just net 3-4% for that month and just be done. But I was leaving a lot of money on the table because you can scale in. Obviously, this low now almost looks like that inducement. So even when you're looking at here, this essentially now is just a bigger version of what I've just showed you here. So you had the low, so like what we said, previous daily low. So now you've got this previous liquidity been taken, so prices rallied up. So again, if we're talking about the pattern I just showed, say this week, for example, I'd want to see price pull back, and then I'd look to go long, and then that would be like your swing. So a daily H4, H12, that would be the exact same pattern of what I traded here, but this is just obviously on a higher time frame. Obviously, price is fractal, so that's why you can do. We're all doing the same thing essentially. If you're getting the trade right, you're all doing the same thing. It's just for different reasons. So whereas I scaled in and took that there, you can scale back up to the 12-hour, daily, weekly, and essentially I would be taking the same trade for the same reasons, but it's just on a different time frame and a different time horizon. But if anything you take away from this video, is just keep it simple. I see so many people online just overcomplicating it, just stick to the macro direction. Anything running against that direction is usually a run on liquidity. And then it's just about your entry framework. Once you've got your model, it's just literally about entry framework. Just focus on executing, focus on managing emotions, and the rest of it is just submit to time. To be honest, there's no sort of way to speed it up, if I would say that makes sense. So yeah, even when I go forward now, that was obviously the trade I took for this week, 4%. For this month of January starting 26, I'm up 3%, as I took a little loss on euro. Yeah, I took a loss on euro, but I'll probably cover that losses in a different sort of week. If I have a losing week, I'll just cover it as well. but it's just because I had a few messages about, breaking down this trade when I posted it on social media. So I just thought I'd do a quick rundown. When it comes to me, again, I'm someone who likes simple things. I don't like to make it all long-winded. At the end of the day, risk is all you can control. As long as you just stick to the same framework, like I said, price is fractal. Essentially, that low here is when you scale back out to like the weekly, it's the low that we're seeing here. So it's all the same thing. So at the end of the day, I'm expecting price to move higher. So I'm just scaling in and trying to find favorable conditions. Obviously, for me, this was at that Wednesday reversal, which obviously, if you know sort of like weekly models, typically Tuesday, Wednesday will kind of be that reversal. But with here, it was very clear, Monday weekly open. Again, we're below the weekly open, below the midnight open. So that's where if you are looking to go long, this is where you'd want to go long because you would more than likely be inside the wick. Yeah, it depends on even with here, you had this obviously bearish FEG and then it got inversed. So there's a million ways, but always follow this sort of price action. So we had liquidity taken, previous daily low. There was an imbalance created this bullish FEG. Obviously, when I went down on the 5 minutes, price then rebalanced it back down and then ended up running again to liquidity. Obviously, previous daily high here. So that was the previous daily high Tuesday in and around here. Obviously, that weekly opening gap. So it just has to run back to liquidity. So again, now, if you're looking at this, you say, how does it repeat? This will be a low liquidity. So price needs to take liquidity out first. So liquidity will be taken. It will probably create, there's an imbalance here created already, rebalance, and then end up targeting liquidity again, which could be, these highs, previous monthly highs, and then just keep repeating the process, guys. But again, leave your comment, leave your feedback. Let me know how you found it. I always say I'll stick to it, but this year I did say 2026, I will stick to at least once a week, just kind of doing a trade breakdown. If I take more than one trade, obviously I'll kind of break them all down, winners and losers. You guys know I've always been, very open about losing trades, and it's just part and parcel of what it is. You can't listen to social media, everyone's just winning 900% win rates and never losing. But yeah, losses. If anything, losing is more likely to happen. It's just about controlling and keeping your losses manageable and just taking it. Like I had the -1, like I said, I had the bias right on euro. But yeah, it was one of those things where you lose. That was last week, and it was start of Jan. I had a bias. Yeah. So once I'm just kind of in a loss. Well, I might as well, for the sake of it, I might as well just kind of go for it. So while I'm here, kill two birds with one stone. So even here with euro, for example, I was looking for longs from here. So I'll just kind of go over this quickly so it makes sense. So I was looking for longs from here, same exact process as before, what I just showed you there. So obviously price came in, I was long, obviously went into profit, hit stop loss. That was the sort of first, no, was that the first week? It was the first week. Sorry, that was the first time I took it. That was the second time I took it. So it was practically identical. So you can see here, went long again. First week stopped me out. That was the first week. Second week, I didn't take this trade because I was like, you know what? All the flow is a bit bearish. I don't want to get married to a bias. So again, a lot of profitable trading is about assessing your sort of makeup, what's going on. So I took a -1 here, sat out, didn't trade this week here. I thought, let me let this go. Third week, when we did get practically the exact same thing happen again, where it got raided. This time there wasn't that sort of pullback. But for argument's sake, this is the thing about just trading your plan. If it did come back to how I like to trade. So, and this did pull back into here. This trade would have made up for -1, -1. Then this would have been +3 or +5 if I let it go to here from the 68. If I let it go to here from the 88. So I'm not going to do all the maths now, but that was a full expansion and more. So again, this is another example of you just have to trade the plan. Just trade the plan. Here was just kind of experience, just knowing that, you know what, I think price isn't ready to do what I think it should do. And this time it did do what I think, but they just didn't give me an entry, and that's just part and parcel of the game. But that's where I went over here, and then obviously practically the exact same setup as you can see, and also with Nas as well. Nas practically the same thing. You can see that previous low run broke the high, bullish FEG in here, go into the fib level, low to high 68, bang on the wick, bang on my first take profit, same thing, closing the gap. So they were practically identical, but I just chose to go with S&P, as obviously it's less volatile. So if there was any sort of mucking around, I was more confident that this low wouldn't get taken. Whereas obviously with Nas, it was pretty similar, but I know Nas has got a bit more energy in it to sort of wick a bit lower. But again, guys, hope you've enjoyed this first video. I will commit to it every week. Again, like, comment, share, and yeah, guys, I'll see you again next week.